From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 23rd, 2015. In today's video, instead of concentrating on a specific currency pair as we go into the long holiday weekend, what I'm going to do is a general overview of each of the U.S. pairs, what we might expect today, going through this next few days with the long holiday weekend, maybe even going into next week with the holiday week as well, and as we look forward to, in just a couple of weeks, we'll be into the new year. So I'm going to get started here on the NZDUSD New Zealand dollar versus the US dollar. Of course, yesterday suggesting a sell into the resistance zone and the long-term trend line. There is the long-term trend line right there on the weekly trend, the weekly chart. You can see the red trend line coming down from the top. Important to note that we are still well within the parameters of the long-term downtrend. Take it down to the daily time frame. We can see the smaller time frame, the daily time frame, has been in a rally. It's been in a rise heading up towards that long-term down red trend line. So we can see the green trend line here. So we saw the rise, then the downward facing blue trend line, then a rise along the green trend line, and now tapping out into that resistance high, the red trend line that sits up at the top of the chart. So the suggestion yesterday was sell as it approached the red trend line. We saw this blue shaded area, zooming it in one more time. You can see the blue shaded area here holding as resistance back here on the left, the black box, here on the right, the black box. Gave us an opportunity to look for a sell into the 6,800 level. You can see my sell is at 6,812. Down here at the very bottom of the chart, 68.12 is the sell, and looking for profit now. We see that we're sitting at 47 pips of profit. The stop loss has been moved to 5 pips of profit, so I can't do any worse, at least at this point, than 5 pips of profit, even if it turns around and goes back up. The stop loss with the trade manager has been worked into profit. So sitting 47 pips, it's been a profitable trade. Protect profit, especially going into the next several days with the long holiday week. Take it down to the 4-hour time frame. We could see coming off of that blue shaded area as expected, the resistance highs that were sitting up there gave us enough resistance to repel the market, turn it back down again. So if you're looking for a trade today, I don't think you want to sell it now. This is not the great place to sell it. You would either look for it, you probably would look for it to jump back up. Let me remove that. You probably would look for it to jump back up here towards the blue shaded area if you were looking to go short or sell this currency pair. Don't sell it now. We're into support. Right now, the pink shaded area is support. We can see a lot of resistance and congestion there. That is support. The next opportunity, I suppose, to sell this currency pair would be a breakdown of that pink shaded area. We're looking at 67.40 or so, 67.45, a breakdown of that pink shaded area. We'll then look for it to head on back down here to the next support, which will be this orange shaded area right here, all the way back down towards 6,700. So if you're in the sell, as I am, protect profit, move your stop to break even or better. Look for the breakdown, 67.40, and the continuation down to 6,700. Protect profit, though, because we definitely could see a bounce back today, given the holiday week. Moving on to the AUD-USD, the Australian versus the US dollar. We'll just go on right down the tabs here. We've been studying this red triangle. If I zoom it out a little bit, you can see there's that red triangle down at the very bottom right-hand corner of the downtrend. We've been studying this red triangle for quite a long time. You see the previous blue trend line where it went down, and then it went up for a period of time, tackling the top of the triangle again, went back down to the bottom of the triangle. Most recently, in the past 3 days, we went back up into this green trend line. That's very interesting that it touched into the downward facing green trend line within the triangle, the middle of the triangle pattern. Yellow shaded area holding as resistance yesterday, right around the 72.45-65 level was the yellow zone. If that continues to hold today, then we look for the market possibly to fall back down towards the orange shaded area down here where the 100 period moving average sits. Of course, back underneath that orange zone, we look for another turn back down towards the blue shaded area, the very bottom of the triangle and the chart. If the market decides to go bullish today and we see a break above the yellow shaded area, we're back up here towards the top of the triangle and the purple shaded area. So for the day today, we're kind of stuck between the orange and the yellow zone. If you're going to go short, you're going to go short at the yellow shaded area, selling from the yellow zone, targeting the orange shaded area. If you're thinking about going long, you're going to go long down here at the orange shaded area, targeting the yellow shaded area, being cautious of the holiday environment that we're trading in this week and next week. Next, moving on to the USD JPY, the US dollar versus the Japanese yen. We're here on the daily time frame. Of course, over the past several weeks, we have been extremely volatile on this currency pair. We see the extreme fall, the extreme rise, and then the fall right back down to the lows again. So it's been quite volatile. Hopefully, you've been able to capture some profit on this currency pair. I have not been trading it in the recent days because of the extreme volatility. Currently, the pink shaded area between 121.25 and 121.55 has been holding as our resistance. The support would be seen down here at the yellow zone. That's 120.55 down to 120.25. And that's duplicated back to the left-hand side where the blue box is. You can see the congestion between the pink and the yellow zone. So we're in that same zone. So, of course, being cautious of the holiday environment, if you're going to go short on this currency pair, try to do it as close as possible to the pink zone, reducing your risk for any short opportunities that you take, targeting the yellow zone. If you're looking to go long on this pair, then allow it to come back down into support the yellow shaded area, at least to provide a lower risk opportunity for the US yen. Next, moving over to the USD CAD, the US dollar versus the Canadian dollar. I'm starting here on the 4-hour chart because I think it's the clearest picture of what's been happening on this currency pair. We can see each of the periods of congestion circled in the red circles. Down at the bottom left, resistance congestion, breakout. Resistance congestion breakout at the yellow shaded area, resistance congestion breakout of the pink zone, and now we're in the green zone. We're attempting to get underneath it today. I'm not sure I would classify this as a breakout yet, but definitely attempting to get underneath it. Watch for false breakouts during this holiday season that we're in. If it breaks out, opens and closes clearly underneath the 1.391815 level, the green shaded area, then maybe we're looking for a little bit of a pullback down towards the orange zone. But it's definitely a possibility that this is a false breakout, gets back inside our green zone. If we're going to see a continuation of the pattern of the trend, that would be a breakout above 139.75. Obviously, it hasn't done that either. So if you're going to trade the trend, you're buying support, breaks of resistance. So at this point, it would be likely, if you're looking for the next opportunity to buy, back down here into the mid 38s at the orange shaded area or the break of the green zone. If you're going to be a little bit of a risk taker trading against the trend, that would likely be looking for a breakout underneath 3,900 and a continuation back down to the mid 38s for the US CAD. Next, moving on over to the GBP USD. It's been an extreme fall for this currency pair, falling all the way from up here into the 1.5200s, all the way back down here. So we've seen nearly a 425 pip move as it has come back down over the past week or so, week and a half or so for the pound dollar. Extreme move. Hopefully you've been able to capture some of the profit in there. I know I did earlier on in the trend, so definitely a good move there for the pound dollar on shorts. Found support over the past 2 days down here above the 1.4800 level in the purple shaded area at the very bottom of the chart. Let's go ahead and zoom it on down to the 4-hour time frame. Obviously, the orange shaded area today is your resistance. So you can see the congestion and support back here. That is your resistance. That's looking at 1.4895 to 49.30 is that yellow zone. Terrible place to go long right now because you're underneath this congestion. If you're going to go long, obviously the better opportunity would have been down here at the purple zone, but I don't think there was enough evidence for that reversal from there yet. That is your current support. The next opportunity to go long would likely be a breakout above 49.30 here for this currency pair. Then you're looking for a little bit of reversal from the downtrend, some correction. Let's take the Fibonacci from the highest high on the chart down to the lowest low. We're sitting at the 236 fib now, 49.07. Above there, 382 back to 49.70. So again, it gives you a little bit of hope for the upside if it breaks above the orange zone. But for the time being, still holding that as resistance today for the GBP USD. Next, moving over to the EUR USD, euro versus the US dollar. This pair been in a little bit of a range over the past couple of days, and we can see that highlighted in the black box. Yesterday, we had a discussion in the trade room about, is this an uptrend or is this a downtrend? And I think there's still both directions are in play here for this currency pair. Fundamentally speaking, with the raise of interest rates out of the US, you would expect this to be a downtrend for the euro dollar because of the strengthening of the US dollar, or supposed strengthening of the US dollar because of that interest rate news. But obviously the ECB a couple of weeks ago was a little bit different. I had a little different outlook on the currency pair. So definitely, I think both sides are still in play. With a longer-term blue trend over here on the left, the more recent upside move here with the green trend line, both directions are in play. I think what we need is a breakout of this box right here. A break to the top side of that black box. We look for it to go higher and resume the uptrend. A break to the bottom of that black box, we look for it to go lower and resume the downtrend. A new lower low, we look for the downtrend. A new higher high, we look for the uptrend. So that's what I believe we have going on right now for the euro dollar. Until then, we obviously are seeing a little bit of a range develop. Resistance at the top of that box into the blue shaded area in the 100 period moving average, and support down here at the green shaded area the past couple of times down into there. So if you're going to go short, then obviously the better opportunity to do that would be up here towards the upper 10900s in the blue shaded area, which that's where it was yesterday, touching into the moving average. Now we've come back down into the 10900 level. If you're going to go long, I think the better opportunity to do that, of course, would be back down here towards the green zone at the bottom of the black box, knowing at some point we're going to see a breakout, either a new high or a new low being made here for the euro dollar. Down to the 4-hour time frame, gives us a little bit of a zoomed in perspective. We're at an interesting area today inside the orange shaded area there for the euro dollar. You can see that orange shaded area, and I'm trying to get it this yellow zone selected and moved over. But that orange shaded area over the past couple of days or weeks has been congestion, resistance, support, congestion. Look at the blue circles back here. So we're in that same similar area. I don't think this is a clear area today to be trading this. If it breaks underneath it, then maybe we're looking for the continuation down to the yellow shaded area. If it breaks above the orange shaded area again today, then we're back to the blue zone. So just be cautious. We're in a tight range right now. Use appropriate risk strategies. A push underneath 109.18.15. Probably looking for it back down here to the yellow zone. Back above 109.40, looking for it back to challenge the blue shaded area at the very top of the chart for the euro dollar today. And lastly, over to the U.S. franc, similar situation, just the opposite. We've seen the rise, the fall, and now we're in this period of indecision down here. We're above the moving average. We have found support. We're actually making a little bit of a higher low along that red trend line. Maybe let's not extend it out quite that far. But we're making a little bit of a higher low along that red trend line. What do we need to see if this is going to turn into an uptrend? A higher high. So that's what we'll be looking for over the next coming weeks. So we see a higher low. Right now, the blue shaded area has been support, resistance, resistance, support. So we know the blue zone 99 to 99.20 is important. As long as it's under there today, we would expect some resistance, which we're seeing right now. Above the blue zone, we begin looking for it once again to try and target back up here towards the pink shaded area. I don't think you want to go long right now underneath that blue zone. If you're going to go long, obviously it makes more sense to be as close as possible to the green zone or a break above the blue shaded area. If you're looking to go short, I suppose this area right here, 9900, 99.20 becomes enticing. Just be watchful for the breakout back above the blue zone. Could be then targeting new highs here once again for the U.S. franc.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.